Wondered how cryptocurrency exchanges work? Dive into the world of digital finance, where these platforms serve as vibrant marketplaces, facilitating the buying, selling, and trading of various cryptocurrencies. From the well-known Bitcoin to the playful Dogecoin, these platforms function similarly to traditional trading platforms, but with a digital twist. Cryptocurrency exchanges primarily come in two forms: centralized exchanges, often referred to as CEX, and decentralized exchanges, or DEX. Centralized exchanges run by single entities offer users the convenience of turning traditional fiat currencies, such as the dollar, directly into cryptocurrencies. Despite their user-friendly interfaces, they have a catch. These exchanges often require users to go through know-your-customer procedures in line with regulatory standards. This means verifying your identity to prevent illicit activities like money laundering. However, with centralization comes concerns about security. As these exchanges become targets for cyber attacks, the question of safety looms large. But worry not, as advancements in security measures like offline asset storage and insurance coverage aim to reduce such risks. Some of the prominent examples of centralized exchanges include Binance, Coinbase, and Kraken. On the other hand, decentralized exchanges operate on distributed networks, eliminating the need for a central authority. These platforms enable peer-to-peer transactions, promoting transparency and security by removing intermediary control over users' funds. While they do offer enhanced security features, they often present challenges in terms of user-friendliness and liquidity. To participate in trading activities on DEX platforms, users typically need to have cryptocurrencies beforehand. Some notable examples of decentralized exchanges include Uniswap, SushiSwap, and PancakeSwap. When it comes to choosing the right cryptocurrency exchange, several factors come into play. This includes security protocols, trading volumes, available cryptocurrencies, fees, and educational resources. Given the prevalence of hacking incidents, it's crucial to prioritize exchanges with robust security measures. Furthermore, assessing trading volumes and cryptocurrency offerings ensures sufficient liquidity and trading options. Fee structures, which include trading fees and withdrawal charges, can directly impact profitability, necessitating a thorough evaluation. Lastly, educational resources are vital, especially for those new to the game who are navigating the complexities of the cryptocurrency market. In conclusion, understanding how cryptocurrency exchanges work is the first step to successful trading. Whether it's a centralized exchange or a decentralized one, each has its pros and cons. Prioritizing security, assessing trading volumes and offerings, understanding fee structures, and leveraging educational resources are key considerations in choosing the right platform. As the world of digital finance continues to evolve, it's important to stay informed and adapt to the dynamic landscape of cryptocurrency trading.